Hope you all can hear me. I lost my voice yesterday. Too much talking, too much having fun here in Austin at South by. But lots of tea, we should be ready to go. So luckily, we've got great people who are going to do all the talking for me. But welcome everybody, and thank you to our friends here at Midwest House and our friends at Summerfest and Summerfest Tech for having us here. So I want to kick this off right away, getting into the meat of really why we're here. So maybe a quick show of hands. I tend to think that here at South by, most of you understand these terms at this point, but how many of you feel like you're maybe about, on a scale of 1 to 10, a 10 as it relates to really what's going on in the metaverse of Web3? Nobody. How about a 1? Okay, we've got gentlemen back there with 1. How about a 5 or a 6 or a 7? Yeah, I think that's about where most of us are at. I want to kick this off actually with an origin story from my panelists. So they're going to introduce themselves and talk about how they became interested in this space. So I'll start off. I'm the moderator today, Marcie Bomberg-Montoya, and I am a partner with a traditional CPA and advisory firm called Wipfli, headquartered in Milwaukee, Wisconsin. Never thought in a million years I'd be working for a CPA firm. Nobody wants me to touch their taxes, believe me. But how we became interested in this was really advising our clients as to what's happening in the future, their strategic planning, how they want to create the next generation of who they're going to become in a changing economy. And we really see that the pace of change today is the slowest it's ever going to be. So that's really where a traditional CPA firm like us became involved and tried to really understand what this was going to mean for our clients. So what we did, we had the foresight of joining the Chamber of Digital Commerce, which is advocating for responsible regulation that doesn't stifle innovation. And it's kept us involved and on the forefront of what's really happening and cutting through a lot of the disinformation that's out there. There have been some pretty big headlines as of late, unless you've been living under a rock. You've heard about, a lot, the FTX, on the plane, frantic tech people on our plane as Mike and I were flying in from Atlanta, saying, how much exposure, do we have with this? And the ripple effect that, is happening in tech. So there's a lot of headlines, but that doesn't mean any of us are bearish on what's happening. Everybody on the stage here is still bullish on the direction of really this new economic opportunity. So I'm going to turn it over to our first panelist here, John, for an intro and maybe your origin story of how you got into this.
My name is John Gregis. I am a lead engineer at a company called LinkPool in the Chainlink ecosystem. My origin story, it was 2012, 2013, I got into Bitcoin. I had a friend who was really into World of Warcraft, and he said, there's this really cool internet money and you can get paid to do things. And I said, yeah, whatever, that's stupid. And he said, yeah, but you could buy weed on the internet with it. And I said, oh, okay, cool, he sold me. And so I definitely wasn't weed that got me into Bitcoin. Realistically, I kind of fell in love with it. I started mining it back in 2013. 2016, a friend of mine who was a investor in Merrill Lynch and myself started a mutual fund for cryptocurrencies. And then in 2020, I joined the Chainlink ecosystem. I've been there ever since, and now I'm leading a engineering team and building really cool things.
Mike?
Hey, good morning. I'm Mike Morris. I work with Wipfli as well. I started off in community banking and the financial technology companies that supported community banking. So my career was seeing how technology was evolving. And probably 2012, 2013 was very heavily involved in a lot of innovation. Worked with a lot of early stage companies at incubators and accelerators, and just started seeing crypto coming into it and ideas around blockchain and AI and the things that were really cutting edge, and realized, look, we've got to be prepared for this. We've got to be able to help these people with their regulations and with development and with due diligence and things along those lines. So it really, from our side, is a necessity to make sure we're staying on the front end and understanding what's going on. There's so much to learn and there's so much happening, and we still really don't know what it's going to look like in the future. but it's fun to watch how that's being built.
Thanks, Mike. Cami?
Hi, everybody. I'm Cami Darling with Decasonic, head of marketing at Decasonic, Web3 native venture firm based in Chicago. We are focused on the intersection of sort of future of consumer and how the mainstream might adopt this technology in Web3. So excited to be at South by, where there's a ton of major Web2 brands planning their strategic entry into the space, and excited to talk about why the Midwest is still bullish on Web3.
Awesome, thank you. So you can see this panelist, I am going to ask them the questions because they're in the space, they're doing things that are exciting, and they see exactly what's happening, but it hasn't all been like hugs and roses, right? There's been some challenges. And we were talking a little bit earlier about some of the shifts that you've made, John, really, when you think about your original business model. I first met John through Mike probably maybe about a year ago, and talking a little bit about maybe some of those challenges, your initial business model, thinking about creating the DAO for Austin and how you've evolved.
Yeah, so back to the DAO. So I was one of the co-founders, creators of the ATX DAO here based in Austin, Texas. And it really started off as a small social group project that turned into, now we have thousands of members in Austin. And it was really bringing Austin to the forefront of Web3, not just socially, but now through legislation. We were trying to pass some legislation in Austin and in the state of Texas to make Web3 kind of a home here. Some of the problems that we've kind of encountered, especially in the banking sector, is every time that we try to throw one of our events, we have to exchange some type of crypto or fiat to crypto or fiat. And in the banking scheme, it's almost impossible. A lot of the vendors around here will not take crypto, and most of our treasury is in Ethereum or some type of stable coin. And so when we need to go pay these vendors possibly $100,000 for fees, we have to reach out to our members who say, hey, would you like to take crypto if you have fiat to help pay this off? And so our biggest problem right now is really the transition from crypto to fiat and then fiat to crypto.
Thanks, John. Now, but I know we were talking a little bit earlier, too, that there's so many opportunities, even with the challenges that you've had. I want to ask you a little bit about how you've pivoted, and we were talking about how excited you were about really being able to build things a little bit under the radar as kind of our regulatory landscape is starting to evolve, but not waiting around for that.
Yeah, exactly. I think in the bear market is the best time for an engineer because there's no rush. We can build whatever we want to without having pressure from investors and then company owners, CEOs to get something out there. And so the bear market is the best time to build by far. And right now, I think we're building some really cool things.
Great. So Mike, back to the traditional space and some of the challenges that we've seen as a firm. We came all in when I joined Wipfli about 5 years ago, and there were really two of us, myself and a colleague, that were going around to all different forums, speaking, educating on what is this thing called blockchain, right? There was this educational, and then if you're familiar with the Gartner hype curve, right, we got into this trough of disillusionment of what does this really mean. And now, when we go out and educate people, it's less about the technology and it's more about the myth busting, right? When you hear about, I went to a Bitcoin mining conference here in Austin a couple of years ago, and just talking about energy usage, talking about some of the, the dark web activity, all of those things that when you just read the headlines, what that does, but yet what we're doing as a firm to try to educate and myth bust some of this so there's not a fear or lumping in, right, of all of these activities in this space, just those that are grabbing headlines. So maybe, Mike, if you can talk a little bit about what you're seeing with our technology industry clients, how they're viewing these opportunities, how they're looking at risk, because a lot of our traditional clients are looking to partner with those that are in the space, but understanding risk mitigation strategies, because I know that's the really exciting part.
Yeah, everybody loves to hear about that. But I think the key thing is you've got the financial institutions, the traditional ways of storing money and moving money, overly conservative, very risk adverse. And then you have the fintechs that are flying by the seat of their pants and just trying to make things happen to get minimal viable product out there and may not always know the regulations and the things they need to be doing around moving money and getting involved more in crypto. And it's frustrating from a CPA standpoint because we're waiting on guidance. We would love the AI CPA to start helping us have real guidance around how you develop blockchain and how you do proof of reserves and do an audit on those. And it could have saved a lot of headaches in some of the exchange collapses. But it's really trying to educate both sides. Here's why you need to start dipping your toe in the water, traditional FIs, and be involved with this. And of course, with the news on Friday, it's going to scare a lot of the banks, again, traditional banks, from getting involved. So then it's educating the risky companies. Like, you got to be less risky to the FIs if you need to partner with an FI to maybe swap crypto for fiat money but just making sure people understand that, and how can we bridge those gaps with the risk to make it to where we can meet in the middle. And what I want to see is more self-regulation, because that'll help deter the forced regulation from the government entities. So it's really getting that understanding of the risk and how we can mitigate it is what we're trying to really help our clients with.
Switching gears a little bit, Cami, there's a lot of exciting, you mentioned, the Web2 brands, right? And what they're looking at. I'd love to hear from you what you're seeing in that traditional space, because your background is very diverse. You see on we'll call it the traditional side, but now burgeoning into Web3, where this is now, we're going back to owning, right, our own IP, owning our own content. The big tech companies not owning these things, right, back in the hands of the people. So how are you seeing that intersection really with maybe the traditional brands and the work that you're doing?
Yeah, absolutely. I think that, echoing what Mike said, it's a lot about meeting consumers where they're at. I think it's perfectly okay to have this Web 2.5 concept where the back-end infrastructure might be on blockchain, but the consumer interacting with it doesn't really know. It's not, there's not NFT and blockchain and metaverse buzzwords getting thrown in their face, sort of confusing them in the process. So with that, I think there are brands that are implementing this in terms of customer loyalty. Someone who's doing a great job of that is Starbucks. They, especially with the Web3 community, they have really garnered a lot of a big audience, I'll say. They dropped, I think, 200 digital collectibles the other day. The site crashed. But I think this is a really great way to really, like I said, meet your consumers where they're at with implementing this technology into your business models, but also rewarding your customers for interacting with your brand. And Starbucks has some of the most loyal customers out there, especially with their wallet model. And so sort of being able to reward them with interacting with their app and reward them with different digital collectibles that could, the value could appreciate, or it could earn them other, items or swag or different experiences. So I think that's sort of, a better way, or not a better way, but a more immersive way for consumers to sort of interact with this technology.
From a demographic perspective, I think there's this fallacy that it's all just the young people, right, that are interested in this. I'm probably the oldest person on this stage at, soon to be 52, but to me, this is the most exciting time to be alive, because we're really seeing new technologies, novel asset classes, things that we wouldn't have thought would be in existence, in our lifetime. So it's not really just young people, but do you see from a demographic perspective why some of the more traditional brands are really, what do they see as the advantage for that from a demographic? And you mentioned customer loyalty as well.
I think with sort of these younger generations coming up, and this is more of a nuanced take, I think, but they sort of are realizing why, the monetization aspect of data, for example. It's why are all of these big companies coming in and taking my data and running with it, and it's netting positive results for them in their business models and whatnot. But why are we just giving it away for free? So I think it's sort of exciting for younger generations to realize how they can monetize certain aspects of the internet and own it. And then I think once that idea gets transferred to like OG users of the internet, which are older generations, they're on board and they're like, okay, cool, let's implement this. How can we strategize and attack the blockchain and utilize it?
I want to take a step back to one of the aspects of a DAO. My husband is the CEO of an arts organization in Milwaukee. And speaking of age, he's got a couple years on me. He's a really young 62, but he started seeing that creatives, right, in a creative economy tend to be the first adapters or adopters, right, to this kind of new technology. So he started created an innovation committee, brought a bunch of people in, try to ideate how could we create economic opportunities for artists in this space. And sure enough, fashion colleges, artists were some of the first adopters and adapters. So he was looking at the concept of a DAO. I want to ask you a little bit, John, because a lot of people, if we think about traditional ways that our businesses have been run, how our economy has been run, how the banking system has been run, it's all this concept of centralized, trusted authorities. So for a lot of folks in the traditional space, they can't wrap their head around decentralization. How does that work? Who's trusted? So I think maybe going back to talking about why a DAO and a little bit, maybe some blocking and tackling on how that works.
Yeah, I guess for everyone that doesn't know exactly what a DAO is, think of it as a company that everybody that is part of that company has a vote of some kind of how that company will go forward. So with the ATX DAO, we started as really just a social group that we wanted to get together, drink some beer, talk about crypto, and then see what happens from there. And because Austin is Austin and the art scene is so big here, we just saw it explode. We had tons of artists that weren't really into Web3 or crypto, but they knew of it and they wanted to understand how they could get their art into NFTs in some way. And so we had more and more people come join our groups. But because a DAO is a DAO and is voted on, what I thought of the DAO from the very beginning may not be what it becomes in the future, which is a good thing because it should be autonomous. So right now, it is completely going to left field and really jumping into the legislative side of things. Not necessarily as much on the social aspect anymore, but really trying to change law and legislation in Texas. And so when we talk about autonomous and decentralization, it's decentralized because I have no control of those funds in our treasury. Our treasury comes from joining the DAO, getting one of our NFTs, and saying you're part of the DAO. That treasury is used to fund our events, push some type of sponsorship in some way. But the best thing is I have no control of that. Just because I'm one of the founders doesn't mean I have any control or access to that because of smart contracts. And so we vote on how that money gets distributed and go from there.
I think that's one of the things that when I was first getting into this space that I was most excited about, quite honestly, is that because I had a 27-year career in banking. I'm about 10 years in recovery right now. But it truly was a challenge to think in terms of that concept. So thinking about what's been happening here in Austin and how this conference has even changed. Mike and I were in line yesterday. We wanted to attend a Web3 meta session at 4 o'clock, and they filled up. There was probably, I don't know, a good city block line of people that did not get in. And then we popped over to the larger conference hall, the larger exhibit hall, and it was the founder of Instagram. You would have thought, well, that would have had a bigger crowd. That wasn't the case. They misjudged here, even at South by, the interest in this. I know, John, we've seen that even here, like it was somewhat underground a couple of years ago. And now you look at all of the sessions and walking through the exhibit hall as we did yesterday, and whether it's, augmented reality, whether it's economic opportunities, in either Meta or Web3, if you walk through that exhibit hall, it just seems every aspect, every tech company, the countries that are here exhibiting. You've got, Germany, you've got France, you've got Taiwan that are all here bringing some of the best of the best, and how they've been integrating that. Let's talk a little bit about the evolution, even in conferences like this, that you think would be much more forward on some of these concepts. Why now are we seeing that interest really? I'm going to have you follow up on that too, Cami. Why have we seen that interest explode?
I think it's amazing, especially now, as crypto has been punched in the face probably 15 times within the last year, and you see more and more interest, which is a beautiful thing. So I even in a bear market, you have that interest, and I think it's ingrained so much now, and more people are getting into it, that it's not going away anytime soon. It's not dead. If anything, it's just cementing itself more and more. With South by Southwest is slowly becoming more of a tech event. You have, especially last year, I was telling you earlier that it wasn't really in the face of South by Southwest tech side. It was here and there, but there was a lot of underground interest. If you would go to any of these crypto events that weren't really publicized by Southwest, but underneath the veil of it, they were huge. There were people waiting in lines to get into these things. And so that's eventually going to break through, and you'll see that mainstream.
Go ahead, Mike.
Well, I think along those lines, I think it's a perfect time. These aren't going away. I mean, some of the coins will go away. Some stable coins will fail. Some smaller cryptos will fail. But Bitcoin's not going anywhere. Blockchain's not going anywhere. So if it's a bear market, now's the time to buy, right? Now's the time to get involved. Start getting into a DAO, seeing what it's like, getting involved. Don't just join a DAO to get the NFT. Join because you want to make a difference. You want to get involved and learn. So now's a perfect time to do it.
What have you seen? I mean, obviously, Cami, you're all in, right? And your company's all in. So talk a little bit about the business reasons there, too.
Yeah, we are quite literally all in. We only invest in Web3 and blockchain companies. I think, like I mentioned earlier, eventually all of these conferences will be Web3 conferences. The technology and the evolution is inevitable. Just, some projects might fail, some will thrive, just like in the .com era, some websites, continued on, some didn't. I think to the point of why now and why in the Midwest, especially since we're at the Midwest House. A lot of the, early adopters and the artists are on the coasts, but a lot of the loyal revenue generating customers do live in the Midwest. So that's a reason why Decasonic is focused in the Midwest, and that's why, I agree it's the perfect time, especially during a bear market, a bear market. They are for builders. And so just coming out to these conferences and seeing, who's still in, who is still building, who has their head down, they're not escaping just because, of a few bad actors in the space. For example, I was in Denver last weekend for ETH Denver, and there was, 25,000 people strong. I don't think that, the bad actors are washing away an entire industry quite yet.
Really, as a follow-up to that, how can we bridge the gap between the mainstream perception, really, of the Midwest as white space, or some would say flyover country, right? And the reality of diverse perspectives and opportunities, really, for investment in the region?
Yeah, so like I said, I come from, I don't know, I forget if I mentioned this or not, but I come from the CPG e-commerce background, and that's sort of what, back in 2021, I was like, what could, NFTs do for this space, and why, how could we implement it to this company? And that's sort of how I fell down the rabbit hole. And at that company, again, our early adopters were on the coast, but our loyal customers were in the Midwest. And so once I was with Decasonic, I was kind of like, okay, now I understand why we're based here. I understand why our companies are building here. I understand why, why we're targeting this area in this region. And while we're not specifically investing into Midwestern companies, especially in Chicago, it's just the resources there, the people there. It's just an unmatched ecosystem. Truly, it's such an underestimated ecosystem, and I encourage everybody to come out to Chicago if you ever have the chance.
You did your part here at the Midwest House, right? So we're going to compete with some construction noise. Either that or they completely agree. Now's the time to invest. So we'll use our outside voices here. Just ask a couple of questions to Mike, going back to how we're seeing a lot of our traditional, the Midwest is considered a little bit more conservative sometimes, as it relates. You mentioned that, Cami, you see things happening on the coasts. But even amongst our traditional client base, we work with traditional financial institutions, we work with tech companies, we work with healthcare, we work with manufacturing, and a lot of even these traditional companies, they're starting to see fresh ideas and new ideas. What are you seeing in a lot of the startup and how they want to work with some of our traditional companies, and that bridging the gap between the different, maybe it's not crypto that they're into, but looking at blockchain too as a technology enabler?
Yeah, we started seeing crypto, our companies get involved with crypto. A lot of times it's other countries that have issues with their currency. Being able to have a debit card, you can go to an ATM and exchange your local currency for Bitcoin or some other coin that you can put into that's not getting manipulated as the local currencies, and they're having a lot of problems there. So finding these issues and being able to take new technology and use it in a way that's going to help the financial ecosystem and help people protect their money. A lot of people have the negative thought now, especially after Friday and all this going on in the news, that this is just going to be a big problem and people are just going to keep losing money. No, it's actually a very safe way to do it if we can set up correctly. We do have some bad actors and we do have people that get involved and take money from other people, but because for the uneducated. But I think now with our companies, they're really starting to see the opportunities to understand how a blockchain can really protect a transaction and how you can really have transparency in what's going on a personal ledger. And you start seeing JP Chase with their coin and with Onyx and bringing it to the front line for people to at least get in and try. And as I said earlier, now is the time to try. So it's exciting to see the ideas come in and figuring out ways that they can usually help the underbanked or help transactions happen faster than going through traditional exchanges or traditional banking environments.
John, I know that one of the things you're looking at too, you mentioned trying to advocate for creating a safe space, really, for this in Austin. And we've seen that also in the Midwest. Small little town, those of you that are from the Milwaukee area that might know of a little town called East Troy. They were one of the first little towns in the state of Wisconsin where Bitcoin was accepted at all of these little businesses in their town square in little old East Troy, Wisconsin. And this was somebody who was all in on this and saw the opportunities. We're not going to use Bitcoin to buy pizzas, right, at this point. But how are you seeing some of the integration, right, of some of these technologies in unique ways? I'm just going to open it up to the panel. John, when you think about the taking advantage of the opportunities, but then also balancing the regulation, like for Austin, to make Austin a safe space. We've heard about Miami talking about those things. Illinois. So the Illinois government, the state of Illinois, is also a member of the Chamber of Digital Commerce, the only governmental entity that is. And they were also looking at creating some legislation to make some safe havens also in the state of Illinois. So maybe I'll start with you, John, to see how you're going about that to create those opportunities. And then Cami, if we can talk about, I know Illinois didn't quite get to where it wanted to be, but it doesn't sound like that's held you guys back at all, right? We'll start with you, John.
Yeah, I think to start off, the aspect of a DAO itself is very difficult as far as trying to structure it as a company. Wyoming DAO legislation in Wyoming is kind of the forefront of that, and we are trying to push that a little bit farther. So basically having on-chain transactions count as actual accounting transactions. As far as Austin itself, though, we're trying to use our NFT as a key almost, or a discount key. So partnering with different businesses around the Austin area, allowing you to utilize your NFT on your phone to access discounts at different coffee shops, restaurants. And so we are developing an application where you can verifiably prove that you own this NFT at transaction time to acquire a 5, 10, 15% discount, which allows us to prop up small businesses where we can partner with them. They can sponsor us in some way, and then utilize all of our members to use their establishment through our NFT.
What are you seeing there in Illinois and Chicago, Cami?
Yeah, Illinois did recently introduce some pretty aggressive legislation. I am by no means an expert in regulation, but I will say, we think it's important for investors to be, protected under all costs when it comes to this sort of nuanced way of investing. So, for what it's worth, we think protection for retail investors and just investors in general is important.
So we've got a little bit of time left. I want to open it up to our panel, and then we can open it up for some questions here. Maybe take about 15 minutes for questions at the end. But for the next maybe 10 minutes or so, I want to open it up to all of you. If there's anything that, say, if you were advising somebody, whether it's an individual or a company, on how to really view what's happening, where to get your information, how to stay current, and what should people be thinking about? Obviously the things that you do, Cami, the things that you do, John and Mike, we're having a lot of conversations. If you just casually, and I think you all know this, whether you're at a dinner party or Thanksgiving or whatever it is, if somebody finds out that you even have a little inkling of an understanding of the space, you get cornered, right? They ask all the questions, they want to know everything, they want to understand, and Mike and I did some community banking forums where we had somebody walk in, a traditional banker, and he said, I'm coming to hear all of this because it's a big Ponzi scheme, right? So, we started educating, and by the end, he said he still didn't understand it, but he no longer was scared of it. So we considered that a victory. But I'm going to open that up to the three of you to maybe talk a little bit about maybe what some of the trends are, what you're excited about, how you can educate, yourselves, those around you. So I'm just going to open that up. A little free thinking idea here.
I think high level, it's, especially if you're very new to the space, I think it's, first things first is to do your own research, form a thesis and decide kind of which vertical or which facet of the space excites you the most and where you want to sort of lean into. There's so many different verticals like data ownership and, like I mentioned, monetizing your data, consumer loyalty, phygital, like retail experiences, AR and VR experiences. I think it's the Wild West, Web3 is. So it can be really overwhelming, but sort of check out different, especially as conferences become more, Web3 native, check out these different panelists and form your own thesis and lean in.
Great, thanks. Gents?
Yeah, I agree. It's so much to take in, but I think if the first thing I'd say is start understanding the basics. What makes it work? What is blockchain? What is a crypto coin? What is mining? What is Web3 going to be, and why is metaverse so important? I think just getting into that, the basic blocking and tackling, the building blocks of what's going to happen is the best way to get started. And then as you find that area of interest, that I just love the privacy aspect of it, or I love the financial transaction side of it, then you dig into those areas. But there is so much information out there. It's very difficult to become an expert in everything.
I think coming from the engineering side, I take for granted sometimes what I know compared to what the average person knows about crypto or blockchain. And so I start talking about this, and you could see it just go right over the head. And so I think for anybody that is savvy in the space already, to really talk about it at high level first, get the understanding of the person, and then kind of leverage it from there. I think on the engineering side, there's just so much resource to jump into. It really depends on what you like. You really like NFTs, jump into there, do some research, and if you like it, dive in more. Metaverse is another one. Smart contract development is a completely different side. I really think it's up to you as an individual to really understand, just like any other topic that's very broad. Web3 is very, very broad. To again, say that you know everything about Web3 is a lie. I don't know even close about anything in Web3 almost, and I live it on an everyday basis. So I think really just go in, find out what you like already. If you like, art, maybe NFTs are the way to do it. If you like on the engineering side, maybe you want to develop some kind of smart contracts for NFTs. So it really depends on what you like. But I would not get discouraged. It's very, very difficult. This is a scary, very scary area because it's so different. But don't get discouraged. Just ease into it a little bit at a time.
And if you like Starbucks, start with Starbucks.
Exactly.
Back to the education side. I first got started, I was one of the founders of the Milwaukee Blockchain Conference many years ago. And we held it at Northwestern Mutual, a titan, really, of insurance. And it was about education, right? But there really weren't traditional programs. You were finding out things from conferences. You were finding out things from YouTube, and Googling different ideas, following different bloggers. But, Marquette was early on, another Midwestern college, talking about how do we educate. But now we're seeing mainstream educational programs adding in, right, a lot of these topics. Recently, through Wharton School of Business, we all know that name, there's a program that issues a certificate in the economics of blockchain and digital assets. It was one of the hardest things I've ever studied, harder than my master's degree, but it was something that, to that vastness, right? We covered a lot of topics, everything from the nuts and bolts of how the blockchain works, to the economic modeling of why you would want to adopt some of digital assets, to DeFi, to NFTs, all of these things. But what was encouraging to me is that the people who were taking this course were from all over the world. And that interest, that like-mindedness, we're starting to see traditional educational systems saying that, yes, this isn't just for, shadows, in the shadows, in a bar, having beer, talking about Bitcoin. Now it's education time. So I know there's a couple programs in Chicago. Cami, you want to talk a little bit about that too?
Yeah, I spoke at a class at DePaul University. It was a graduate school class. That's a blockchain and cryptocurrency class, and I said this to Marcie, but I went in like, I know these kids are definitely going to learn, or they're going to be teaching me some things. It was like the day after the FTX collapse as well, so it's definitely more of a conversation. But and I know as well, the University of Illinois at Urbana-Champaign is they're putting feelers out for a blockchain center. So I know that they're educating the next generation with the information that we have on this technology, and they will, it'll continue to evolve and they'll continue to educate them. But yeah, I wish I had these courses to take when I was in school, because it's so interesting. So yeah, Chicago is really on the forefront of teaching the next generation.
So for your education and what you built, John, how did you learn how to build in this space?
Well, I've lost a lot of hair, and no, I think little by little. I got into development a long time ago, and I didn't really jump into blockchain until 2016. So it's a lot of years. It's a lot of new technology as well. So if you're not learning something new every single day, you're probably doing something wrong. And that's scary to think about. Like I almost know nothing about it, which is crazy. But at the same time, the documentation for all of these new applications is getting better and better. Over at Chainlink, the documentation is robust, and we want it to because we want the users to be able to understand how to use this, implement this technology in their own applications. Because like you were saying, it's worldwide. I can launch an application today and have users from every single country in the world use it and not have to gain any investors because I don't need to push it anywhere. I can build it myself. I could be a one-man team and start a billion-dollar company if I really wanted to, because that power is in your hands now.
You're only as good as your documentation.
Exactly.
Great. Well, thank you to all of you. Just one last, I guess, closing question. What are you most excited about? Let's say 5 years from now. Let's be futurists. Where do you think this will all be? And this is a surprise question that I didn't prep them for after this. So,
Well, I can start. I do think that we're going to have our personal ledgers. I think people are going to start adopting digital wallets on a faster rate. I think it'll start accelerating when people can actually see and feel what it's starting to look like. As I mentioned, it's a great time to get involved because we are at the beginning. We're still the Wild West. There's still so many opportunities to be creative and come up with a new idea and own the content, own it, and be able to bring it on and have all the security and the things we need to do behind the scenes. So to me, it's an exciting time, but I think in 5 years, we're all going to be touching it on a regular basis, and you are going to be able to buy a piece of Bitcoin. You're going to be able to buy a car with your crypto. So you're going to be able to do these things. It's just going to take some time, and we're still working our way through it.
I'm personally excited for a more immersive shopping experience. If you've ever seen Clueless, like a Cher Horowitz closet, it's always been my dream. That's mixed reality technology right there. So, excited for that. Also excited for the other consumer loyalty use cases, phygital, sort of like the Webkins model where you buy something physical and then you can redeem it online for an NFT. And also mobile wallets getting a lot more user-friendly.
well, I know I'm shivering. I can see goosebumps on your legs over there, Cami. Who would have thought,
Didn't expect this from Austin.
Yeah, warm day in Texas, and 2 days ago we were 90 degrees, right? But I want to open it up for those of you who aren't shivering and can talk. If you have any questions at all for our panel.
Okay, like this? Can you all hear me? Yeah, great. I won't take too long because I know everyone's cold. Hi, I'm Chloe from Kayaks, and Michael, I really like the concept that you said about Web 2.5 and bridging the gap between traditional finance and Web3. Personally, we're doing the same. We're a digital asset data reconciliation and business reg reporting engine. And I just want to address a bit more of the elephant in the room, the Signature Bank collapse yesterday. Obviously, this will affect Web3 and crypto, considering the on and off ramp is now disconnected for many of crypto companies. What do you see in the next few weeks is going to happen? And have you ever heard of operational choke point? And is this something that you think is transpiring between right in front of our eyes, or do you have an opinion about that?
Yeah, so with SVB failing on Friday, you're going to see the ripple effects. I mean, they're heavily involved with fintechs, heavily involved with Silicon Valley investments. They had been the stalwart bank since the early 80s with being forefront with this. And so then you see what happened with the stablecoin USDC and Circle, and they had uninsured deposits there. So we don't quite know the ramifications, but we'll see how much of the money comes from the reserves from the Federal Reserve Bank. But right now, there's people who the money's just frozen, right? Even if they're going to be able to get it back, it could be days, weeks before they actually get access. Some of these early stage companies that have to make payroll, if they are bootstrapping, they're going to be in a lot of trouble unless maybe they exited another company successfully and have some reserves back there. So it's going to have a ripple effect to the market. Even crypto got punished because of it. The stable coins have already been under attack for a while now, and with that, they lost their peg to the dollar because they lost their reserves. So right now, it's free falling. So it's going to be hard to see the long-term ramifications. We'll see how much money we're getting back. But we were just talking before this. If you all remember Mt. Gox in 2012, that exchange failed. People are just starting to get money back now, 11 years later, right? So it's going to be interesting to see what happens. Hopefully this gets cleaned up relatively quickly and is a blip on the map. Raising interest rates were a big impact of this. I think the important thing to say about SVB specifically was it was just basic banking blocking and tackling that made the mistake. They made mistakes there that ended up being a fall for the bank, and then the run of the bank, people wanted to take their money out, and they didn't have the reserves to cover it. So we'll see how it all plays out, but it's we're going to see more of these things happen over the next probably 6 to 8 months if rates keep going up.
Will do. Hey, similarly, taking the approach of sort of Web 2.5 and trying to bridge that gap to make it easier for artisans to get into sort of the Web 3 space and not have to go through all of the extensive steps to get there. But talking about sort of learning something every day, not just from the engineering, but also from the legal standpoint, and trying to figure out deploying in Grand Rapids versus Austin. You talk globally. The legal regulatory pieces, any suggestions on where to check out, where to get involved, and how to stay out ahead of that as we go forward?
That's a good question. We've talked to many a lawyer, let's put it that way. And I think that's the problem is there are no regulations yet. And especially if you're talking about state regulations, the federal regulations, it's a rat's nest of just a lot of information that may or may not be true. So I would say that you are going to have to be able to pivot. So anything that you do, just know that it's not going to be set in stone yet because there's no real regulation yet, but that allows you to pivot if need be. So go to a direction, try to see if it works, and cross those fingers and hope for the best.
Well, I do see some people forget there are existing regulations. There is anti-money laundering. There is OFAC checks and things that we need to be careful of when we do these types of transactions. So as we start getting into the trustless transactions, peer-to-peer, those things are going to creep in. Those are still federal law that we have to abide by. But yeah, Congress doesn't really know what to do yet. They're trying to figure it out. State and local government's trying to figure it out. We're probably going to bump our heads a few times trying to get this done. It's coming, but it's hard to see what it's going to be yet. And again, as I've said, as more we can self-regulate and come up with ideas on how we can prove what we're doing and prove it secure, hopefully the less we get hit by the hammer of regulation.
I would say, though, as far as like outside the regulation point, that Web 2.5 is there now, and a lot of it you may not even know that it's happening. There's a big sign-in with Ethereum push where it would allow you to, instead of having a company control your username and passwords, you're controlling all that information, and it's basically gating all of the database access. So you don't have to worry about a company going or getting hacked, and all of your information is out there in the world. You now control all of that information. And I would really say that's more of that Web 2.5, where it's a little bit of both. You still have the traditional database where a centralized entity controls that, but now you get to control your actual credentials on the user side.
Totally agree, especially on the web and browser side. The problem that we've run into so far is more on that mobile side of how you get that integration with the wallet and bring that over and sort of the complexity on that front.
Yeah, I would say mobile for crypto is not there yet at all.
Thanks.
I have a question on the DAO front. As you mentioned, you started ATX DAO, and it's shifted from a social club to much, much more. Can you talk about, what are really good use cases for DAOs, and then what maybe use cases you've seen for DAOs that maybe aren't the right use case? Because I know when DAOs came out, everyone's like, oh, this is a DAO, that's a DAO, this should be a DAO. And realistically, no, probably not. But can you kind of talk about the use cases for DAOs that you're bullish on?
That I'm bullish on. I would say when we first started this, the very first question everybody asked was, what are we investing in and what are we buying? That is not what a DAO is for as a whole. It can be used for that. It can be a way to crowdfund if you want to. That's where you're kind of going into the weird gray area of investing, and the SEC will come down and crack down on you. So we specifically were not an investment DAO. We were a social DAO first. We had people trying to say that we're going to buy one of the islands over here in the Lake Travis, and I said absolutely not. That's not what this DAO is for. So what am I bullish on? I would say I'm bullish on using DAOs as a voting structure for companies. So instead of necessarily using it for an investment arm and having a treasury and voting on that treasury with the DAO, you're using the DAO voting side for leading your company in a certain direction. At LinkPool, our staking platform is actually controlled through a DAO. So you can create proposals and push the company or push the protocol in a certain direction that you think as a whole should be going through. And so for us, I think using a DAO as a tool for voting for a company outside of the financial side of things is best in my eyes.
Great question. Yes, sir.
Thanks. Hey, John, can you talk more about that like DAO integration that you were just talking about, like with businesses? Like, how does a business, integrate that? Like you talked about Starbucks earlier. Like, how would Starbucks just like do a DAO kind of the way you said?
I have a question similar. Like, how would like a service provider get involved in a DAO? Like, how would like a DAO have insurance?
So, well, the DAO insurance is also a good question. Are you talking about the actual integration in like an app?
Like big brands?
Are you referring to a company being a DAO, like structured as a DAO to then vote on a certain?
Yeah, well, kind of the way you were just saying that, the DAO could be used to vote on issues for the company, like that.
Yeah, so with a traditional DAO, you have a group of people that can create proposals, or anybody can create a proposal. It really doesn't matter. It depends on how you structure it. But say you have a company that has 5 employees, but then 10,000 users. You could have it structured that your user base could have a certain amount of voting power to say something happens. So they can create proposals. Each person is weighted in a different manner, depending on how much they either are part of the company or just a user of the product. And then you can create proposals to change how that company would be structured, path going forward, roadmap. And so you as a company, if you're running a company as a DAO, you would have a group of people that had voting power, and certain people would actually create proposals to say, hey, this is going to happen in this way, or I would like it to happen in this way. And then the entity as a whole would vote and say, yes, that's a good proposal. Kind of like what we're doing in our country. When we have times of every 4 years voting on politicians, it's the same thing, except it's in a company.
Well, I think we probably have time for one more question. If anybody else has a question? Oh, there.
Hello. I was curious, what's your guys' thoughts about how state departments, like revenue departments, we set up to recognize and to collect like DAOs, and there's like crypto regulation on the state level? If you're following what I'm asking.
What was the beginning of that?
How will revenue departments for the states be able to support kind of like crypto tax?
That's a good question.
Stump the panel time.
I think most likely you would have to third party that. At least for us, when we do any kind of accounting, we have to pay our own accountants to do on-chain accounting. So for the last 2 tax seasons, we've had to actually pay our taxes on anything that we've made. We've put everything in stables for the most part in the last year and a half, so we haven't had much fluctuation, but we still have to account for everything that we do. We have an accountant that does everything, so yeah, I would say so. The NFT or the actual asset that we hold? We don't have a token, by the way. That we don't have we do not have a token. We specifically do not have a token because of pump and dumps. So we have an NFT, and this is why we manage it the way that we did. Our NFT is used as basically a membership. It's nothing. I mean, it has monetary value, I guess, if you try to sell it on the open market. But we, as a DAO, do not have a token We rely basically on everyday helpers that want to gain membership. Our membership allows you to go to certain events that we have. And in the future, when we kind of launch this application to integrate with other businesses, it will allow you to have discounts throughout the city of Austin.
Well, I think too, like you think about if you sell a boat today and get cash, I mean, it's easy not to pay revenue, right? It's somewhat the honor system. But as you think over time, as we have our blockchains and our governments and the IRS can catch up with how we're going to collect on those, we'll have the blockchain that'll show those transactions. You don't have to say, well, this is a 20% transaction or whatever the tax laws become. But as of right now, it's tougher to enforce.
There's some really good information and resources actually on the Chamber of Digital Commerce website. There's a whole white paper if you've got time to kill and you want to read a 120-page white paper on taxation of digital assets. They've got it for you. So really creating the FASB accounting rules around it also. Got about 5 minutes left, so any other questions? Panel, do you have questions for each other at all?
I'm good.
Okay.
No, but thank you to the Midwest House and South by Southwest for having us.
Yeah, absolutely.
Okay, and
Thank
I'd
you.
also like to thank you, panelists, but I want to thank our friend Lena here in the audience from Summerfest Tech. So, and Kevin, of course, all of us, hopefully Cami and John can make it down to Summerfest Tech coming in June. We have a whole afternoon dedicated to programming about Metaverse, Web3, and a lot of the opportunities there. So our partnership in the Midwest is strong with the Midwest House, South by Southwest, and Summerfest. So thank you for bringing us down. We thought it was going to be a lot warmer. So we'll go in, get our coffee warm up, and you've got the next panel after us is our friends also from Generac, another Milwaukee-based company here. Going to be a fascinating panel on energy, so stick around. Thank you, everybody.
Thank you.
Thank you.